Real Estate Rockstars, this is Aaron Amuchastegui. Hey, you've probably heard about the mastermind that we hosted in Austin over the last 4 years for all of our podcast listeners. And this last March, we had a fantastic time, a bunch of amazing speakers, and great fellowship. Well, I wanted to take some of those speaker talks that we had and release them to you guys here on the podcast so you can get the value that our members got when they were there, and also make you think about maybe joining us next year. So we've just released the dates for next year. It's February 25th through 27th, and we're only selling tickets for the next 30 or 40 days, and then we're going to lock down the orders, and so we can start, sending out the value ads for all of that. And if you end up joining the podcast mastermind, if you end up signing for the mastermind, you get to become a part of our private Facebook group, our private circle app, all sorts of referrals between different people. And then you'll also get recordings, all the recordings for the past several years of masterminds that we've had. But, just so you can hear a little bit more about kind of what you missed, get some added value just for being a listener, because I appreciate all of you guys that are here. Here is one of the clips of that, or here's one of the, 45-minute talks. I hope you guys love it.
All right, we got started. There's one of my early slides we're going to push to this afternoon on some more book work, but that was really, really great to witness and get to see. We like to start the events like that. One, you're asking yourself, why is it important for me to be here, right? Because we know that for you to get here, a lot of you guys had to, even if you're local, you had to cancel days worth of stuff to make this commitment. Cancel days worth of meetings, and if you had to travel, it's even more extreme. Your cost to fly, your cost of the hotel, your business, everything else. I know that you guys coming here is a huge risk. It's a huge bet on us. It's a huge commitment. And so we like starting the event of you guys kind of going through that. Why is it important for me to be here? Help get that buy-in, so that way you guys really invest the time that you're here. You spend a lot of money and time to be here. So if you dive in, the methods that we go through during this, they are proven and they work. So I would just encourage you to, if you have that emergency call and you've got that emergency work thing, we all do, we're busy, go out in the hall and do that. But when you're in here, I would just challenge you to go all in, even if this stuff feels weird or different or whatever. So good job, everybody, so far. My next little 20 minutes is what I call the state of the market update. So we've done this every year. One of the things that I guess I'm known for, or I like to be known for, or that I really get a kick out of, is being a trend spotter in kind of the real estate place and the real estate market. I study data analytics all the time on what I think is going to happen with the markets. If you guys followed me on Instagram for a long time, or even the podcast for a long time, there's times that I study stuff. I make really, really big bets on the market, up and down. I usually share about it online, and for people that would have followed it and done the stuff that I did, I think it turned out pretty well. So we've had a wild year. Right? One of the biggest things that happened kind of right before last year's Rockstars. So I had made a post about it back last January or February, and said hey, this is going to be a big deal. And I remember there were even some members that showed up last year that got onto my Instagram page and like, it's not going to be a big deal at all. It's not going to happen. It's just BS. And then the week of Rockstars, the morning of, all of a sudden that whole lawsuit and shenanigans got fast-tracked. Okay, it's real and it's happening now. But I think for the most part, so last year there was the commission lawsuit, big settlements with lots of different companies, lots of different businesses. In general, I don't think that it's changed the industry that much. I think the people that it hit the hardest were people that owned the big brokerages. So the big shareholders in the big brokerages that had to write really, really big checks. And so for some people, it was a very painful, albeit it feels like an unfair experience. Although when I was watching the lawsuit and watching some of the hearings, it became pretty obvious it was probably going to succeed, just because of the way the law is and the way the law is written. So it was unfortunate. People had to pivot. But in general, I don't think anybody had less business this year or less income this year because of the commission lawsuits. Would anybody disagree with that? And I'd love it if people disagree. Did anybody have instances where they did less business because of the commission lawsuit? Cool. Go ahead, Matt.
I'm not saying I did less business, but when I would get inbound calls, it seemed like the buyers that were more seasoned, that had bought houses before, and in my area, that's houses priced over $450,000, $500,000. I had many more of them only directly wanting to work with the seller not wanting to pay the buyer broker compensation level, and I'm pretty good at pitching it, and overcoming that. But I had more this year that were like dead set on, no, I just don't want to pay it. I'm going to get a better deal now if I go to the seller. Now I say that years past on my Zillow leads, because that was a big part of my business or whatever. There were always a few buyers that did that. It's not like this was the first year that it happened. There were always a guy who like, I just want to go directly to the seller. And it's a very specific demographic. It's someone who's obviously sold houses before. They bought and sold a couple. And I saw that a little bit more. And it's like, and then under 400,000, not an issue. Like I didn't have one. I had some agents had trouble pitching it. I didn't have trouble pitching to one person that they were gonna have to sign a form and guarantee to pay me if the seller didn't pay me. But at a certain price point, I did see it. I don't know if it really affected my business or not, but I just noticed that.
It's really interesting. I get really specific on that lead type, right? Because I think when people are calling Zillow leads, half the time they expect that when they see the name in the corner, they think they're calling the listing agent or they think they're calling the seller. And so sometimes they're surprised of that. And before, a lot of buyers probably didn't care, or under a certain price point, you're like, no, I'm not the listing agent, but I can go show you that house. They're like, okay, cool, let's do it. So so I could see, pivots, so maybe it did impact your business. Anybody have similar things that Matt said or similar solutions? Go ahead. And then guys, like volunteers, let's have mics going for any of the question times. It'd be great if when people are asking questions, they're holding a mic. We got one here and then one over here.
So I don't think I did less business, but I felt that it made me get better. I would always do consultations with a lot of customers, but if a client isn't willing to sign a buyer broker agreement, at least I'm guilty, but I think a lot of us are showing them one or two houses. But how much time does that take away from really being in front of a client that wants to work with you? So I spent weeks showing a few houses, one turned into 10, and didn't really get a buyer broker agreement signed until it came to writing an offer. Obviously, after this lawsuit, it forced me to actually get the buyer broker agreement signed, which is the equivalent of pulling credit for a lender. Like, they're not committed until you pull credit. They're not your buyer client until they're willing to sign an agreement. So it forces me to, have conviction for that. So. Yeah,
like force you to have the tough cut. So stand up, say your name and where you're from.
Brandon, Bowie, Maryland, between Baltimore and DC.
All right, when we pick up the mic to talk, I want you guys to re-intro by the end of it, what your name and where you're from, and we've got a bunch of inside jokes for that too, of the people that remember to do that like crazy. So thank you, welcome. We got another question over here, or a comment over here.
Thank you.
And the mic is good because the guys that are recording everything, if you do it on a mic, it gets recorded in the video that we get for later.
If you want to make the highlight reel.
Yeah, if you want to make the highlight reel, you get the mic, you raise your hand, you dance around.
I'm Doreen Booth from Naperville, Illinois. It's a suburb of Chicago. And I think the thing that's different for me is I see a lot of buyers who won't sign the buyer agreement. So how it's changed my business on my listings, I do way more open houses. So I do open houses now Friday night, Saturday, and Sunday. And they're for the seller's benefit because I'm getting a lot more people through that are actually just not willing to sign. They may go work with a realtor afterwards, but they don't want to sign before they see the house.
Oh God, so they can only see the house during an open house because they won't sign with an agent.
So that's how, and that's been positive, right?
Yeah.
So
cool, I like that. So it actually increases open house traffic if you do it at the right time because people can't go see a listing when it's not an open house. Maybe a little bit more work to convert them. So last year, we didn't quite know how it was gonna look. Again, like January a year ago, 14 months ago, half the people said nothing's gonna happen. Half the people said the sky is gonna fall. Then something did happen, it changed. But overall, I think in general, it forced us to pivot as individual agents, and it unfairly really incapacitated some of the people that had to pay the bill for this, and the people that got paid for it was just a bummer. It was a bummer, a reality, and we'll see what happens next. So kind of a lot of other stuff that's happening this year that we'll probably talk about on some panels later. We talked about it a little bit last year. So ChatGPT for real estate, there is so much stuff that AI is doing right now. And when used the right way, can turn an average person into so powerful. But if abused, it can make somebody look like they're totally not doing their job and an idiot. So how many of you now when you read a listing, you can tell if it was a ChatGPT listing or not? Right, when that first came out, that was brilliant because ChatGPT knew more about my houses than I did. So it was fantastic. We'd say, write a listing agreement for this, and it would. And we'd say, make it funnier, it would. Make it shorter. Brilliant, brilliant stuff. The problem now, not really a problem, but everybody uses it. And then so many people use it, now you can tell when it's a ChatGPT listing or not. So I think one of the new edge changes that's going to start to happen this year is using that technology, but then making sure that you personalize it. Making sure you take it to another level of go, okay, it helped, it did the heavy lifting for me, but now I got to do that last 10%. Because when you're in a buyer's market, right? We're pretty much, in most places in the US right now, it's still a strong buyer's market. Buyers get to call the shots. They are going to see a difference. If they see a lazy agent, it's going to change the way that they do things. And you only have when you've got tons of listings out there, you can very quickly capture someone's attention. So what you write on your listing is more important than it used to be. We just put a bunch of listings live, and we went into so much detail of what we're going to put in the comments, and we redid listings from a few months ago. And just from the text and the pictures this time, the amount of traffic we're getting is so much more. So use all the technology that's out there for you. Again, we're going to have some people talking about some of the technology there that's later, but make sure to put your human touch on it. All right, existing home sales. So this is over time, right? This is from the Fed housing data. And so here's where we're at now. So 2024, we're at 4 million in home sales, and now we're on our way down. The lowest point, the lowest amount of annual sales that we've seen ever since 1996. That's sad. That's a bummer. But really, that info is out there for you to act accordingly and understand accordingly. So if you are doing the same volume, if you sold 10 houses last year, and you sold 10 houses the year before that, and you're going to sell 10 houses this year, you are winning. You are actually gaining market share because less and less stuff. If you look at 2021, 6 million houses sold, and then now it's dropped down so significantly. Right? So the reason these stats are important is so it can help you figure out where you are in your market, what to expect, and what reasonable expectations can be, and how to beat those expectations. The Fed fund rate, we've talked about this a whole lot, or if you listen to the news much, there's been a whole lot of this the last couple years. It always makes and breaks real estate markets. Back in 2005, that's when I got into real estate. And I got really excited, and I graduated from school, and I was running a home builder, and all of a sudden the housing market crashed, and that's when everything really, really changed. But they started raising that fund rate at the best housing boom ever until 2021. Takes a little while for stuff to crash, and that creates that bigger recession. Our curve, this most recent curve, was very similar to what we saw way back then. The only thing that was forcing all of the Fed decreases at the time was we had a complete financial collapse into the system. And so we like to look at these charts and see what can we predict? What do we think is going to happen? My long story short on the Fed fund rate changes is I don't think we're going to see much change in the Fed fund rate over the next 12 months. And what does that really mean? It affects interest rates a little bit. There's other things that affect your 30-year fixed interest rates, but it affects investor interest rates a lot, and the investor market is probably what's been changed the most significantly. All right, 30-year fixed, we had a great last 5 weeks actually. We had the 30-year fixed drop 5 weeks in a row. Some of the best news ever, and the lowest now that it's been since last year, other than a couple little dips. So as we're going back down, so what are we expecting in real estate? Last year at the beginning of the year, there was a lot of feeling of, hey, it's been tough. If I can just hang on until rates drop, my business is going to be fine. And if you were here last year, I said rates are not going to drop, so you've got to change your business and understand that this is the new normal. And what I'd encourage people to see is way back in 05, right? Look at how long rates can actually stay the same, right? We had abnormal stuff happen with the housing crash, because the housing crash affected everybody when it happened back in 08, 09. And then we had very abnormal stuff happen during COVID, where rates and the economy was weaponized in more ways than one. But this was totally weird stuff, right? What we're going to expect more is just consistency. So our rates over the next 12 months, between 6 and 7 will be your average 30-year fix. It'll lead to creativity and try and do other stuff. So I talked to you about market share. So a very quick example of how are you doing or not, right? So what should your goal be? If your goal is like to get better every year, if your goal is for your business to grow, how do you grow when the total number of buyers and sellers is actually going down, right? So the only thing that you can, and some of you actually did 10 deals 2 years ago and 20 deals last year, and you're gonna do 30 deals this year. That's great. That's a really easy way to track. You're beating your competition, and you're beating 90% of the real estate agents that are out there. And there's some of you guys in this room, we look forward to hearing about that. We look forward to you sharing about that. And it is something to be celebrated. Because if you just do the same volume this year that you did last year, that is to be celebrated too, right? So the way that market share works is if 1,000 houses sold in Austin last year, and I sold 100 of them, that's 10% of the market. That would be fantastic, right? All right, so whatever that percentage of the market is. So how many deals did you do compared to how many deals were done in your market? Or if you only compete in a zip code. There's some of you guys, like Bill, he focuses on a zip code, on a neighborhood, on a market. He doesn't want to do deals anywhere else. He wants to do deals there. So that might be your market. So if your market is houses in Austin above $1 million, all right, how many houses sold above $1 million last year? How many were me? What's that next year? Because what you want is if the number of total solds goes down in half, if you're increasing by a little bit, you're increasing market share. Does that make sense? So if you need help with that later, grab me and we'll try to look at how we could look at your market share so you have a realistic goal. Because the goal used to be, hey, I did 20 deals last year, I'm gonna do 30 deals this next year. The goal can be, hey, I did 3% of market share last year, I'd really like to get to 5% of market share this year. Number of realtors since 1980, we're seeing this little drop at the top right now. The funny part about any of these stats when you see them in the news or anywhere else is the number of realtors and the number of active real estate agents, the number who actually have done a transaction in the last year is a very small percentage of the total number. So just know when you see that stat out there, whether it's competition or not, it's telling us something, but that stat is kind of watered down because what the stat should really be is how many agents closed more than a deal last year or more than 3 deals last year or something like that. But I do believe the number of agents is decreasing, the number of active agents is decreasing. Not necessarily by choice. All right, home sales. This is like my happiest slide in here. And the happiest slide being the number of homes sold per month. So yes, we were selling a lot more houses back in 2020 and back in 2021. And for those of you guys that were agents back then, that was a great time, right? But what this is a good reminder of is every year in December and January, sales go way down. And every year in February, March, and April, sales go way up. So wherever you're at right now, the best time to be refocusing, to jump with more excitement, and to go do something is right now. That's why we always do this conference right at the beginning of the year, right at kind of the end of the first quarter of the year, because selling and buying season is among us, and it starts now. And and sometimes it goes up by 10, 20, 30, 40% to what we just had before. So it's a great time to refocus your business, learn some stuff this week, and reapply. Man, median sales price is a funny chart to look at. So median sales price is what did houses sell for? So it pulled off my number. So green is Austin. So bright green, you can see the sales price in here. So 2021, median sales price was $590. 2022, we got up to $645. Today, we're at $550. Our median sales price today is below what it was in 2021 in Austin. Now, Austin is the worst, my favorite city in the world. And in 2021, I thought I made the best real estate bet in history. I started investing heavily out here in 2015, so in 2021, I felt like a genius. The fact that I didn't sell them all in 2021 makes me look like an idiot because it's changed a lot. But not everything. So most of the places, actually haven't had that big of a fall since the peak. But it's really interesting to see that most places have been flat since the peak. So then the black one is I think the black one is national average. But there's San Francisco in here, there's Washington, D.C. in here, there's Phoenix, Arizona. So there's Denver, Colorado. So a lot of our hot spots. And if you go back to our high point, in 2022, where our peak was, most of the median prices today are at or below where they were in 2022. That does not happen very often, where you've got 2 years of no median home price growth. I don't think we're going to see that tick up yet. Like, we'll have to see some economic changes for that tick up. But what you should see in history, I really wish I had a laser pointer or something on here. So that black line, like back here where it was normal, that's your trend line, and it should be your trend line forever. Right? So when you have crazy things that happen in the market, you go above the line, and then you have crazy things that happen in the bad way, you go below the line. But you should come back to where that line was, and that's what goes forever. So if you're trying to make a prediction of what stuff is going to look like when it renormalizes, you would just print out this chart and you'd put a ruler on it. And your ruler would go all the way through and go, okay, maybe it's going to be in 2026, we're going to hit right back on there, and then that's when we get our normal trend up. So I love messing with charts like that. Maybe get a little bit of time later on that. All right. So the California led U.S. for home investor share in 2023. 35% of sales in California in 2023 were by investors. So 35% of transactions were investments. So the 2024, now it's down to 14%. So a third of all purchase and sales were investors. Now it's down to 15%. You take that and you realize that we're also down 40% in total number of transactions. 75% of the investor transactions have left the market since 2023. Take that into like a thought for a second, depending on where your niche is and what you're doing. Man, on the podcast 2-3 years ago, our big thing was you find an investor client, you find a builder client, you find an investor client. Why? Repeat business. If you're gonna help someone buy their dream home, that's amazing. And then you're gonna help them sell their dream home 4 years later. If you do an outstanding job, you're gonna have that client and you'll do 6 deals with them over their lifetime. If you do an outstanding job buying and sell their primary. And if you do an outstanding job with an investor, you'll do 6 deals in the next 3 months. But the big part of that reality is if your business is investor-based, I want you to have a realistic expectation that 75% of the investors have left the market. And so if you've seen a slowdown in what you're doing and you expect to keep doing what you're doing and maybe something is going to break free, that's when I would encourage you to dig deep about pivoting or other business ideas while you're here. Builder volume also down. That's that other repeat investor. We can see our trend now dropping back down. One thing that there is about home builder trends is they project way, way out. Like part of the way Lennar is valued as a public company too is just the number of starts and stops. They don't actually have to make money on houses. They just have to keep the wheel turning. So when they stop and when they change directions, they believe they're going to change directions for 4 to 5 years. So I started on real estate as a home builder, and if you look historically, whenever we've had drops and starts, it's always been at least 5 years before they pick up again. So if builder clients are your target, that's great, but be aware and be real of what could happen with that. All right. So how do we increase market share? Why are we focusing on market share again? Again, that's that idea of being realistic on what our goals should be and our analysis, because it can get pretty discouraging if you are among someone that has had a down year or you're a little bit behind last year in the way that you used to rank something in transactions, and you're going to meet someone at your table that got into real estate 18 months ago and they've done 50 deals. That will happen. Instead of being discouraged, be excited, be real, and see what we can learn. I got a few more things. But before I jump into, I'm going to go a little bit long on my state of the market. I'll probably go 5 long, and then we'll just change some of our other timing. So some of you that know my story, back in 2009, that's when I discovered courthouse step foreclosures. I was working for a home building company. We went broke. I went from making a lot of money fresh out of college to making nothing, and I discovered this new industry. And I was the first person to do this industry at scale. And a few years later, big hedge funds came in and said, we want to do this at scale. But I'm confident when I try to tell people, I invented an industry. I was the first person that bought houses on the courthouse steps at the absolute bullseye of where all the foreclosures were happening in California at the time. I was the first person to do it. First person to do it at scale. When I showed up, there were 3 guys doing it, and they would get some money together and buy it. And I was the first person that said, hey, I can run this like a home builder. I see the vision with this idea, and I grew it. So within 2 years, I went from someone that was broke, right, to making crap tons of money, having lots of employees. Our brokerage was the biggest one in Northern California. And the reason I tell that story, this fast forward secret, Blackstone put me out of business later, and that was one of my first times going broke. But making millions at that time, and what I learned is why I wasn't supposed to be the guy that should have done that. Who was way more qualified than me were the agents the year before that had done 5,000 transactions in Sacramento. Right? The people that were way more qualified than me were the people that already had general construction companies and real estate brokerages and things like that. The people that should have invented that industry and taken over were the people that were super, super successful that I put out of business. It's because they were so focused on what they were doing instead of trying to take the analysis and do what's next that a nobody could come in and take it. So they should have been trying to learn from me. And the times when Blackstone came and put me out of business, they said, hey, come work for us. We'll buy your company. If you don't, we're going to put you out of business. I was this young, dumb, cocky kid. Like, you aren't going to put me out of business. I made $100,000 last month alone on just the commissions, not even the profit. I should have Googled who Blackstone was. I would have known. And that's a real, true story. I was just too young and too cocky to go, hey, I've been really successful. Maybe I should try to learn from the new guy, right? All right, other big things that are going to change our market this year. I'm going to jump through this last part. This was a big change this year. Love him or hate him, huge change to the real estate market is coming. So Fed set to cuts as Trump policies take shape, right? So the Fed is not going to do any more cuts. They're going to try to see what changes are happening with the tariffs, with the Doge cleanup, with everything else. So they're going to wait and see if these new ideas are going to change the economy. U.S. economy grows 2.3 in quarter four. Again, not going to have rates go up or down. And even if inflation goes up, the Fed is going to hold for a while. So there's a lot of stuff in the news. Retaliation promised after Trump imposes tariffs. So Canada, Mexico, China, there's been a lot of stuff in the news about what these tariffs and what they are going to do. And I think overall in my economic analysis, if he holds true to it, I think it is going to be a miracle for our real estate market and our economy. I think it's the best chance we have of seeing a stronger real estate market recovery in the next 12 months than we would have otherwise. So lots of tariffs, lots of deals that are being done, selling green cards for $5 million now. That was actually a plan. I don't know if you guys know, that's always been a thing that you could take foreign investors and foreign investors could come invest in one of your projects, and if they stayed invested for more than a year or two, they could get citizenship. And so there was ways, the whole Miami Brickell area was built on those investment deals where people wanted citizenship, they would invest $4 or $5 million to it, and they didn't get a return. These investors never promised a return, they were going to get their citizenship. Trump said, that system is broken, I'll just sell those green cards for $5 million and we'll put it back into the economy. The Doge, if you're not following what Doge is doing, that's the thing that's really going to change the market right now. It's every day they're posting on Twitter, this is money that was wasted that we're cutting out of the system. So let's see if this will play for a second. I'm going to play 2 minutes of this clip.
What can you cut from? And you look at government expenditures, roughly 70% of government expenditures you can't cut. So it comes down to a small percentage that you can cut, but you find out how much can you cut. So the important thing is 3%. The other thing about it is to realize that if you make those moves, the bond market will benefit. You see, and so interest
rates will go down.
Right, and interest rates going down, interest rate expense is most important.
If the federal.
All right, so to summarize what they're about to go into next, right? If Doge can actually cut $1 trillion in spending out of the market, right? That reduces our odds of inflation, right? So it reduces our odds of inflation greatly because then a huge amount of money that was getting spent. So the other economic policies they're talking about, no income tax, stimulus with the tariffs, changing some things around in the market, being kind of pro-business again. Now you have a chance that people can actually be making money in the economy without the inflation also going up. The problem in the past is if they lowered rates, people would get successful, inflation would go up, and then they'd have to drop rates, they'd have to raise rates again. So our biggest hope of having a chance of rates being lowered with the economy also being strong is if Doge is successful with that trillion in cuts. And I watch that chart every day for where I think that's going to go. It's very hard to balance, having, like, if the economy is great, we're not going to get good rates. So part of it, like, what, do we want the economy to fail? Like, kind of, if interest rates are what people are focused on. But then if it gets too good, then it goes up. Everybody starts buying houses. Everybody starts getting rich again, buying fancy cars. Inflation goes up. So that's my biggest hope of what we think could get it to where we could have a chance of, in the next 3 years, rates that are back down in the 5s, while also having a strong economy where people can buy. I'm going to skip over on that speedometer.
All right, real estate rock stars. So hopefully you guys loved hearing one of our speakers from last month's mastermind. If you are considering joining us for next year, now is the time to sign up. We're only going to have ticket sales for the next 30 to 45 days. And after that, we cut it off so that way we can focus on providing value and not selling tickets. So for the event this next year, February 25th to 27th in Austin, Texas, if you're interested in getting a ticket, you can go to realestaterockstarsmastermind.com. And if you want to chat with me about anything, as always, come find me on Instagram at Aaron Amuchastegui. Thanks for listening.